Hey everyone, happy Tuesday. It's your favorite loan officer in the whole wide world. Hashtag who? JLoan. That's right, it's Mortgage Tip Tuesday, and you know what happens on Tuesday, right? Another Tuesday, another tip with your favorite girl. I hope you guys are having a fantastic start to your week. Of course, I wanted to bring you some information until next Tuesday. But today's day is National Face Your Fears Day. This happens every second Tuesday of the month of October, and this year it happens to fall on October 11th. And so I wanted to talk a little bit about our fears and some quotes that I found, and hopefully be able to tie it into what I want to talk about today. But we all have fears, right? I am terribly afraid of snakes. I do not like heights, like to be really high and look down. I have my fear of failing, fear of dying. There's things that we fear, and it's not because we think of them all the time, but if we come encounter with them, there's a fear there. So I know that there's those natural fears, and of course people always tell you to overcome your fears, and for me it would be very hard for me to overcome being afraid of a snake or a spider. I don't want one, I don't want to see one, I don't want to pet one, but I know there are things in my life that I can overcome those fears, and those are the things that I want to talk to you about today, because when we allow fear to become debilitating, I feel like we kind of limit ourselves and deprive ourselves of all that the world has to offer. And one of those things that it may deprive you from, of course, is homeownership. But before we get to that, Nelson Mandela had a really great quote, and he said he learned that that courage was not the absence of fear, but triumph over it, and that the brave man is not one who does not feel afraid, but he conquers that fear. So I want to kind of tie that in with my home ownership, because I get it all the time. I'm afraid, I don't know if I can afford it, what's the first thing I could do, I don't want you to see my credit. There's a lot of negativity that comes into it, and right now in our world right now, everyone's kind of fearful to kind of take a step forward, right? Interest rates are high, housing is high, all these things are going, and you're hearing a whole bunch of negativity. And so I kind of want to try to bring a little bit of positivity into what you're hearing, and just saying, if you want home ownership to be a part of your story and your journey and your family's history, you got to take that step. And there's programs out there that can hopefully help you to get into your home. And here's one of them. So I did a video a couple weeks ago, and that was in regards to a 2-1 buy down. And I don't believe in that video, I did talk about the program, but I never really broke it down. And so a borrower can really see how this may benefit them. And then now I'm adding how this can help a seller in today's market. Because interest rates are higher, your homes are sitting on the market longer, and you may want to move on with your life, or maybe your new build that you started last year is now being built and your home's sitting on the market. So how can you help to ease a buyer's concern? So I kind of want to dive back into a 2-1 buy down, because I did this example for a borrower. I thought it would be very helpful if I did it for you. So of course I want to talk about how a buy down can ease your pain during higher interest rate times for a buyer and a seller. Okay, so I want to explain how this really works. So I'm going to use $350 as my purchase price here, because I don't know if you can find anything less than that, and that seems like it's just a very average home price right now in Texas. And so I'm going to use that value. So if you did a $350,000 loan amount with 5% down payment, your loan amount is $332,500. And so for those that didn't watch my video last time, what is a 2-1 buy down? It's where you pay up front to buy down your interest rate every year. So the first year you can buy it down 2% from where the rates are, and then the next year you can buy it down 1%. And so let's talk about that. So hypothetically, I have to say hypothetically, you know I can't talk about exact interest rates without speaking of APR, so I'm just giving hypothetical rates in my scenario on the board, okay? So that's why I wrote it right here, hypothetically. So let's just say rates today for this scenario with 5% down is 7.25%. So I'm only going to talk about principal and interest here, but keep in mind if you're a first-time home buyer or someone who's never bought a home, this is not your total payment. Your total payment will be principal, interest, taxes, insurance, mortgage insurance, anything else that may be associated with the property. But as far as your mortgage is concerned, it's principal, interest, taxes, insurance, mortgage insurance. That's where you hear lenders always say your PITI. Okay, those are the initials for it. So we're only going to talk about P&I, which is principal and interest of your loan. So if we started at 7.25, which may hypothetically be your rate today, this would be your payment, $2268.24. Okay, so what your buy down says, well, hey, if the rates are starting at 7.25, you can buy down your rate 2% during your first year, payments 1 through 12. So now your payments during your first year are at a 5.25% interest rate, and your principal and interest is $1,836.08. Now, that's payments 1 through 12. The next year, buy down year 2, your payments 13 through 24 are at 6.25, because remember the second year, it's only being bought down 1% from your original interest rate. So your payment's gonna go up to $2,047.26. And then obviously at payment 25, it starts your actual payment that you should have had, which is your $2268.24. So you basically are able to get into your home and pay lesser during your first and your second year. So let me talk about how this all works and how the money comes into play. So I'm going to erase some of this here. Hopefully you just rewind the video if you want more, or of course you can call me. All right. So we're going to talk about your year 1 savings, because what they do is they take what you were going to pay, all right, and they subtract it. They subtract from it what your actual payment savings was to what you paid during your first year. I think I said that wrong. Let me try that again. So what you were going to pay, and then we're going to subtract it toward what your actual payment is during that first year with that buy down. And that savings per month was $432.16. And your year 2 savings was obviously less because it's lesser, which is $220.98. Okay? So over your first year, the savings that you'll have times 12 payments, okay, is $51.85.92. And then your second year savings, obviously times 12, we're taking that $220.98 times 12, is $2651.76. We do basic math and we add those together, for those that can add that greatly, is $7,837.68. This would be the cost of your buy down. Now, every lender's different, so I'm going to say that and state it up front. But here at Union, your seller pays this amount for you. So don't even come out of your pocket. How about that? Okay? So this is what happens, and you get to save all that money. And you as the seller, you get your house off the market because now rate is not a concern anymore. So I'm just saying, there's options out there. If you want to buy a house and you want to sell your home, there's ways that you can do that. You just got to be creative. You got to use the programs that are out there and the special people that are there to help you, like me. And I can help you either get into one of these programs, and I can help you as a seller with telling you what your cost would be to help you sell your home faster. As always, it's so excited to come to you on a special day. Until next Tuesday, be safe, be blessed. Bye-bye.